Hi, everyone, and welcome back to your Daily Five. I'm Leslie Jouflas. Trading Live Online is my website, and feel free to come visit. And here's my email. If you'd like to drop me an email, just say hi if there's a question I can answer for you. And I do also look in the comments on the YouTube for a couple of days or so. And if there's anything that I can answer for you, I'm happy to do that. So feel free to leave comments there as well. And you might be interested. There's a couple of books they have. One is called Trade What You See, How to Profit from Pattern Recognition. I wrote this with Larry Pesavento, and this covers uh, a lot of the patterns that I use on your daily five. These are mostly the harmonic patterns that are in Trade What You See, such as AB equals CD, the Gartley pattern, the butterfly pattern, three drive pattern, etc. And the other book is Essentials of Trading. It's not what you think, it's how you think. And unfortunately, that's not in publication any longer, but I think you might be able to find some copies on Amazon and some other booksellers. So on April 25th, my last Your Daily 5 video was posted, and that covered a breakout setup that I had been watching. And so we're going to look at that today and see what happened with that breakout setup, and then take a look at where we are now. And I'll tell you my opinion on where I think the market is going. So let's get right to the charts. I'm going to start with this 60-minute intraday chart of the S&P 500 futures, and we're going to actually work up in time frame today rather than start from the higher and go to the lower, because there's some detail that I want to point out to you here. And we'll also take a look at the Nasdaq and the Dow Jones Industrial as well, but I want to focus on the S&P today. So here is where this red arrow is showing us where that last FOMC meeting was. And the market had the spike up to this high of 40.73 and 3/4. And that's a number that I've been mentioning for, several times on your daily five over the last couple of months. The market, you can see here right around this level that the market it tested that area, moved to the upside. And so back here, right in this area, this is where I was seeing a breakout setup, and the market did have a breakout to the downside here, and see the gap. That was actually the gap actually occurred on April 25th, and that was the day that the video was posted. But I hope that you follow the process on that, and in the future there'll be more breakouts, and hopefully you'll pick up some tips from that. The market, notice how the market from the breakout to the downside, notice how that came down and retested that FOMC meeting high. So this low right here on the S&P 500 is 40.68 3/4. So it just slid past it by only 2 points and then reversed and had a gap up the next day and moved all the way to the top of this range. It did trade a bit above this high here. That 4,200 level has been an area that the S&P has been trying to get through, but so far successfully, it has not really closed above this range. And then today we saw a gap to the downside, and the market sliding back down and finding support right around this area. So with this detail and what we're looking at as far as price levels, holding this 40.68 3/4, in my opinion, is going to be an important level for the market to hold. It's because of this FOMC here. If it breaks that, we might get more of a dip to the downside. Overall, I still think the market can try for that 4,300 level to the upside, but it does have to prove itself by getting a close above, actually back here. Back here is 42.08 3/4. So it does have to get a close above that level. I think even just closing above this high right here the high from a couple of days ago will do it. I think that was 42.06 and a quarter. So that was pretty darn close to the 42.08. So you can see that overall, we're still in a big range. And so we've got the 47, we'll call it 40.73 just to round it off. We've got the little low there. That's been tested again. These highs have been tested a number of times. And now we're back about in the middle of that range. So this kind of maps out for us, where the market high resistance and low support is. And a break of either of those will lead to probably at least the size of this range. So here I've marked in this gap area. The market did not quite get into this gap from the down move today. So we have a low of 41.0550 from today's trading. Once again, this is May 2nd, and this gap has a low of 40.97 and a quarter, and the high of this little bar here is 40.8550. So that gives us a range, a little range if the market moves down again to watch. Now, one thing about gaps to keep in mind is that, many times they get closed, the price will come down and find support, maybe within the gap, maybe right at the close. But in this case, because this gap is right down at the lows of this range and very close to that FOMC number, we don't want to see that price start closing below that gap fill number, or I think it's likely to break that support if that happens. We're only talking about a few points difference there. So if the market comes back down, it would definitely be watching this area. So we've had a strong run to the upside, a reversal back to the downside, and now we're just in the middle of the range. These dashed lines are just showing us some other little kind of minor areas of resistance and support within this range. You can see right here all the testing at this price level, which is right around that gap. This is just about the center line, and the market is kind of settled in there right now. Okay, now looking at a daily chart of the S&P 500. So we started on a lower time frame and now we're working up a little bit. So this shows some kind of interesting levels as well, because this is a little bit different view. So here's where the highs of the range was that we just looked at on the S&P 500. Here's where that 42.08 is. Here's the FOMC high. Notice this trend line coming down where the market's been found resistance here, broke through it, and now it's a support line. So that is also kind of coinciding with those lows that we just looked at on this 60-minute. Right here, there's this inverse head and shoulder pattern, and you can see the neckline come across. It's almost intersecting with this. So I wouldn't really want to see the market come much below that level. So that's what I'm looking at on the daily chart, and it just gives us another little picture. We can really see this range in here from that. And also the RSI, I think, is really interesting. We can see how it's bumped up to these highs on the RSI, but hasn't really gotten through there. And then here we have a little bit of a low where the market tested that previous FOMC a couple of days ago. So if the market breaks the downside and RSI breaks below this little support level here, then I think, as I mentioned a few minutes ago, that we'll see a bit more of a dip back down. I'm not looking for the end of the world with that, maybe just more of a deeper retracement from this low to high, or possibly this low to high. And then if we break above here, we want to see this RSI get above that resistance point. All right, let's take a quick look now at the Nasdaq and the Dow for comparison. So this is the Nasdaq on a daily chart. And so, you can see here's where the resistance level is. It looks similar to the S&P 500 as far as this sort of big ranging kind of a pattern here. But these lows here, these are the lows I think that the Nasdaq needs to hold right down at this low. I think if we break that, then again we'll probably see a deeper retracement. And if the highs of this little range here break, there's still resistance right up here, very close to this 0.50. So I think we need to watch out and see the strength of any breakout to the upside. If it easily gets through here, then I think the 618 retracement using this high to low from 2021 into October 2022 will be the next area price level for the NASDAQ to move to. Okay, and finally, let's take a look at the Dow Jones Industrial using the YM, the futures contract. This looks a little more interesting, I think, to me, because we have this previous just big choppy um, section here, and you can see that the Dow got back up with these highs back into just about the center of this, which would be the expectation because there's a lot of resistance right around usually the center of a coil like that. So if it's able to get above these highs here, then I think it's going to clear this resistance and probably head up uh, towards the high of that range, and which is also going to be about the 786. And conversely, breaking below here, and I think probably a bit deeper retracement. So it's the same thing with the RSI on the Dow. But this high, this peak right here, had made a lower high, and then this is the support level to watch on the RSI. So whichever direction it moves, you want to see the RSI moving in that direction. And if it's not, then it might be telling us that if it breaks to the downside, but it's not able to break that support, it might be telling us there's more underlying strength to it, and vice versa. If price breaks above, but RSI is not able to break these peaks, then there might not be as much enthusiasm to the upside as what meets the eye with a breakout. So that's it. That is what I'm looking at, and we're just waiting to see which direction now we go with these little bit larger ranges. Well, thanks for watching. I sure appreciate it. Have a great trading week, everybody, and I'll see you on the next Your Daily 5.